let's move on. Every Thursday and Tuesday, actually, for that matter, we are joined by Tim Ord of the Ord Oracle. Now, you can go and check out Tim at the ord-oracle.com. Check out his newsletter, check out his book, check out his results. They do not lie, and we go over mainly the SPY and gold, and I'm really looking forward today to hearing from Tim about gold, because of course we've had some nice move, not only just in the contract, but in the miners as well, which is really what we've been waiting for. Tim, can you hear me?
I sure can, so
let's dive into it.
Can you hear me?
I can. Sound loud and clear. I'm looking forward to diving into this here.
All right, it's just this was kind of a repeat. There's nothing has really changed dramatically since we got the bicycle here on Monday. It's just kind of a repeat. There's a reason why I'm kind of bullish on intermediate term, so it's kind of a review. But chart one, there's two indicators. One's kind of short term, which is the bottom window, and one's kind of longer term, which is the top window. The bottom window is the advanced decline with the 5-day average. And anyhow, this produces a bullish signal, at least on a short-term basis, that can last several weeks, if not longer. And anyhow, it's a 5-day average, advanced decline. Anyhow, it gets below 0.7 is the critical area for a bottom. Then it has to rally to 3 or higher within 30 days. This whole process, last time we got this signal, it got down below 0.7 on January 13th and rallied to 3.27 on January 21st, which is only 6 days, well below the 30 days. So it was kind of a powerful rally on a short-term basis.
Sure.
And I marked the previous ones going back over the last couple of years, shaded in pink there. So they all came at bottoms, and they all produced decent rallies, some better than others, but it was a bottom-forming pattern. At the top window is the McCollin oscillator. It's kind of a complicated formula. Sherman McCollin made this, I don't know, back in the 70s, but it's a good, it has an advanced decline in it. And anyhow, the trigger is when it falls below or minus 300 and rallies to plus 200 within 30 days, it's a bullish intermediate term sign. And these triggers can last multi-months.
Okay. And
one was formed, we got one here on January 21st, signaling that this is a multi-month rally. So you got a short-term and an intermediate-term rallies going here. So let's flip to chart 2.
Okay.
And
got it up right now.
And yeah, okay, this chart. Anyhow, it's a Zwag breast thrust indicator, and it's what it is, advanced decline, or advanced issues over total issues. You take a 10-day average, and you get the signal when it drops below 0.4 and rallies to 0.6 within 10 days. And the last signal came in 6 days. So it's another type of signals. And it said Zwag breast thrust indicator only happens in bull markets. So looks like could be a bull market. And when they do occur, they usually become support. So the worst case scenario right now is about 5,800. So
okay.
All right, I heard the music.
Oh, yeah, so. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. You can go check out his website at ord-oracle.com. Additionally, you go to TFNN.com, go over to the Services tab. Right here, we have 2 fantastic webinars from Tim Ord. That is the Secret Signs of Market Tops and 6 Secret Ratios Every Trader Should Know. Tim, before we went to the break, we were looking at chart 2 with the Zwag breadth thrust indicator.
Right. Okay, so we got 2 kind of advanced declines, volume type indicators that are giving bullish signs intermediate term. So let's kind of look on chart 3, kind of where we are right now. And what markets, the only way markets are bottom is on panic. So if you see panic, you're going into a bottom. If you don't see panic, it's going to keep going down until you do find panic. And I use the trend to find where the panic is. And also volume's actually a good help too, but ideally you like to see climatic volume along with a high trend reading. And if you get that combination, it's usually a good sign that you're looking at a low. If you look at the volume chart, which is second window up, I marked out the previous selling climax, is what you call them. That's when volume jumps close to 100% compared to the previous days. And if you notice, on Monday we had one of those days. We had a climatic volume. And on that day, if you go up to the chart, or the candlestick chart there, I marked in blue the trend closed at 1.19, which is panic in the trend, what I consider panic in the trend. And we had a closing tick of 448 down tick readings. So the market kind of just threw up at that day. So we got panic in the volume, you got panic in the ticks, and you got panic in the trend. So that's where I went along. And so how high is high? Don't know. Could this be a trend that's already seen its bottom is going to keep going up? Maybe. But a lot of times selling climaxes, if you look at if you go back down to the volume chart, if you look at the one back in November of last year, that selling climax was tested. If you look at the candlestick chart, and it also was tested back in that December low where you had a selling climax. Not all of them are tested, and it's starting to look like this one probably won't be tested. Either way, test or no test, as long as that selling climax is tested on a lighter volume, which is pretty lightly, it's going to keep the bullish scenario. So I notice right now that the S&Ps are starting to break above the previous highs we had a couple of days ago. So there's starting to be evidence that probably we're not going to go back down and retest Monday's low.
Okay.
If you go down to the bottom there, that's the VIX. And the VIX is kind of confirming that. The VIX is, when I made this chart, the S&Ps was below its previous high of 2 days ago, where the VIX was making a new low. That's a bullish divergence on a short-term basis, suggesting that this today's high may keep going. And so far it is. We're starting to break a little bit higher, not a lot, but my opinion, we're probably seeing the low and we're starting another uptrend. So, and it could go on for a while because seasonality actually turns bullish today. So seasonality can be off a couple of days either way. But we're heading into a weekend here too. So if we hold if we hold in this vicinity all into Friday, chances are Monday was the bottom, and the market's just going to keep going. So it looks pretty good. So anyhow, I'm staying long. There's enough evidence for me to hold this position.
Fantastic.
So anyhow, looks good. We can go to gold chart.
Very much looking forward to hearing about it because we're finally getting some action right now in the miners. Before you came on, Tim, I was looking at, we had VGZ, I think it was up like 10% or something like that. GDX was up roughly for AEM. So the miners are making some moves today, which is really fantastic.
Yeah. We'll kind of, we'll look at the bigger chart. We'll look at the smaller chart. But anyhow, chart number 4 is, you keep seeing this chart. This is a reminder that the monthly charts rule the weekly charts, the weekly rule the dailies is on all the way down. So as long as the monthly charts remain bullish, you really should lean on the bullish side. And the bottom chart is the up-down cumulative up-down volume on the monthly chart with the Bollinger Band. The next window higher is the cumulative advanced decline with the Bollinger Band. As long as those two indicators hold above their mid-Bollinger Band, the uptrend's intact. If you notice over the last couple of days here, both those indicators have turned up, suggesting the rally was starting. So that's quite a bit of information on the monthly chart. So monthlies are bullish. This is a couple of different buy signals I got created here. Chart number 5 is the bullish percent index for the gold miners index / GDX. Now it's another ratio, and it gave a buy signal back on January 10th of this year. So a couple of, about three weeks ago, as the RSI got down below 2368 and turned up. So that was a buy signal basically on January 10th. And I like to do multiple buy signals of different methods. And the next method is this is a weekly, it's a weekly cumulative advanced, or weekly inflation deflation ratio. RSI got below 30 and turned up, and I think this came right around that January 10th time frames too. So I had a confidence of two different indicators giving me quite a bit of confidence that the next rally is about to begin.
Okay.
And a lot of these rallies, especially on the weekly time frames, are multi-month. So I think we're probably going to rally all the way into, my opinion, probably July. That may change. It may not last quite that long, but it looks pretty good. This is probably going to be a multi-month rally. So, and actually on Tuesday, I flipped to chart 7.
Yep.
Tuesday, where we're talking about both those bottom indicators, which is the 18-day average up-down volume, next window higher is the 18-day average advanced decline. And both those indicators were making higher highs as GDX, this is actually, GDX was making a lower high at that time, which I draw a blue arrow across those previous highs. And I was saying that we're probably going to break above new highs here pretty quickly. And here we go. So, and both those indicators are above -10. That suggests as long as those two indicators hold above 10, which is that green area across the chart, the uptrend's intact. So we like to also see a sign of strength above a previous high, and that's actually what's happening today. So now the previous high will be support. So we're heading higher. We're probably going to hit new highs. And I think this market in general will probably rally into more or less into July before we get some sort of another consolidation phase. So it looks pretty good for the next multi-months.
Fantastic. Well, Tim, I really appreciate you coming on. I guess we'll see you next Tuesday. I'm thinking we're going to get some moves in the gold pretty consistently as well. So thank you so much for joining us, Tim.
All right. See you next Tuesday. Thanks a lot for having me on.
Absolutely, Tim. Folks, stay right there. We'll be right back.